So, in the investing world today, you see $0 commissions plastered everywhere, right? It's become the standard. But that raises a big question. If every broker is offering free trades, how on earth do you decide which one is actually the best low-cost option? Well, that's exactly what we're going to dive into. Let's find out what truly matters as we look ahead to 2026.
And this really is the big question, isn't it? We've all seen those ads screaming about zero commissions, but you gotta wonder what's really going on behind the curtain. Is there some kind of catch? The short answer is, well, it's a little complicated.
So here's how we're going to tackle this. First, we'll look past the whole $0 commission thing to find the best all-around broker. Then, we're going to highlight some champions for very specific needs. After that, we'll pull back the curtain and show you how free trading really works. And we'll wrap it all up by helping you figure out the perfect match for your own investing style.
Right, so with commission-free trading pretty much everywhere now, the whole game has changed. The fight isn't about who seems cheapest anymore, it's about who gives you the most bang for your buck overall. You could say this is the new battlefield for brokers.
Exactly. A great broker today has to bring way more to the table. We're talking about really powerful, easy-to-use trading platforms, top-notch research tools, customer service that actually helps you, and of course, a huge selection of things to invest in. That's where you see the real difference these days.
Okay, so who actually takes the top spot? We've sifted through dozens of platforms, crunched hundreds of data points, and you know what? One broker just kept rising to the top, again and again, for most investors out there.
And that top all-arounder is Fidelity. Yep, for its mix of low costs, fantastic tools, and a business model that really seems to put its clients first, Fidelity is taking home the crown for the best overall low-cost broker. So what makes Fidelity the big winner here? Well, the number one reason, and this is a huge one, is something called payment for order flow, or PFOF for short. The key thing to know is Fidelity doesn't do it. Now, we're going to break down exactly what that means in just a little bit, but believe me, it's a massive deal when it comes to trust. You add that to their gigantic selection of investments, their awesome customer support, they even have real physical branches, and their super powerful platforms, and yeah, you've got a clear winner.
Let's just glance at the stats. A $0 account minimum, free stock trades, that's all pretty standard now. But look at that pro column. That's the real game changer. By saying no to payment for order flow, Fidelity basically eliminates a huge potential conflict of interest. Now, on the other hand, if you're a big-time futures trader or you want a ton of crypto options, you might need to look somewhere else.
And this number? Wow. This just screams trust. We're talking about over $15 trillion in assets under their administration. Fidelity is an absolute giant, a true veteran that's been in the game and innovating since all the way back in 1946.
But hey, best overall doesn't automatically mean best for you, right? We all have different needs as investors. So let's switch gears and look at a few brokers that are absolute champions in their own specific areas.
Think for a second about what's most important to you. Are you someone who needs to borrow money on margin as cheaply as possible? Or maybe you're an options trader and you're tired of getting nickeled and dimed on contract fees. Or maybe you just want to make sure the cash that's sitting on the sidelines is actually earning a decent return. Well, there's a specialist for each of those. Okay, for anyone who uses margin, wants to trade all over the world, or gets into futures, Interactive Brokers is, without a doubt, the king. They have some of the lowest margin rates in the entire business, period.
Oh, and what about those super expensive stocks you can't afford a whole share of? This number is for you. Interactive Brokers lets you buy fractional shares of over 10,500 different stocks and ETFs. That gives investors of all sizes some incredible flexibility.
All right, moving on. If trading options is your thing, you absolutely need to have Webull on your radar. So most brokers charge you something like 65 cents for every contract you trade. Webull charges nothing, a big fat zero. No commissions, no contract fees.
And that's really the bottom line here. Committing to totally free options contracts makes Webull a super compelling choice for anyone who trades options with any kind of regularity.
And what about that cash just sitting in your account, waiting to be invested? This is where Moomoo has really made a name for itself. They offer some of the best interest rates you can find on your uninvested cash, especially when you're just signing up. And get ready for this, because it's a real jaw-dropper. As part of a welcome bonus for new folks signing up, Moomoo is offering a staggering 8.1% APY on your uninvested cash for the first 3 months. I mean, come on,
That is an absolutely incredible reason to let your idle money get off the couch and start working for you.
So let's just recap our specialists real quick. You've got interactive brokers for cheap leverage and pro-level trading. You've got Webull for totally free options trading. And you've got Moomoo if you want to get a great return on your cash. Each one is a real champion in its own lane.
All right, we've talked about who's best, but now it's time to finally understand how this whole free trading thing actually works. How do they make money? This is where we get back to that term I mentioned earlier, PFOF. So, what the heck is payment for order flow? To put it simply, a lot of these free brokers get paid a tiny, tiny fee to send your stock order to a specific big company, a market maker, who's the one that actually executes the trade.
And this right here is the fundamental difference. Because Fidelity doesn't take these payments, their only job is to hunt down the absolute best price for you. But for brokers who do take that money, there's a potential conflict of interest, right? Are they sending your trade to the place that's best for you or the place that pays them? It can affect your trade execution, which means you might end up paying a tiny fraction of a cent more per share. And believe me, that can really add up over thousands of trades.
So we've gone through the best all-rounder, we've looked at the specialists, and we've uncovered how free trades actually work. So now, it all boils down to one simple thing: matching the right broker to you and your needs.
So here's a super simple cheat sheet. If you're kind of an all-round investor who really values trust and getting the best price, Fidelity is your horse in this race. If you're an options machine, Webull's free contracts are a no-brainer. If you're using margin or trading futures, Interactive Brokers is the pro's choice. And if you tend to keep a decent amount of cash in your account, you got to check out Moomoo's high interest rates.
And that brings us to our final question for you. Now that you're armed with this knowledge, now that you know what to look for beyond just zero commissions, take a moment. Think about your own habits, your goals. What kind of investor are you really? And which of these brokers is the best fit to help you get where you want to go? Thanks so much for tuning in.